Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. This is silver on the hourly scale. My observation this past week tells me that silver is beginning to act as if it is in a fourth wave, not in a second wave. It is beginning to act more like it is in the same structure that gold is manifesting. So I just want to put it up front so that you keep that in mind. And you can see that it is very reluctant to give back gains overall. On the 60-minute scale, it is hardly coming down, while we see a much bigger slide taking place at the same time in gold. The structure that I see right now tells me that it hasn't finished with a move that started here. It is complex, sure enough, it is complex. The move that we had starting from here turned out almost certainly to be an ABC in this manner. So that's behind us. And then we came down. Most likely we have this as an A, this is a B. We had 1, we had 2, we had 3. I think on Friday it finished on the hourly scale just under the 200 moving average. The 50 was coming down, the 21 coming down. It looks to me like it painted a perfect triangle for us. If you like, a textbook movement here would basically bring about a decline under 26 towards this level, 25.73 or so. I don't know how far it's going to go down. If I work with some ratios, it has already covered the equality between the A and the C. If we were to use it like that, it actually runs through 1. Do you see? But it doesn't look like it's finished, so there is a scope for it to continue down, perhaps towards extension, and that would mean towards 25.50, 25.35 or so, at which point I'm reasonably convinced that there'll be quite a bounce. Not only you have support right here, you also have the other side of the channel, yes, the edge of the limit here, of the other side of the channel. So I do see a bounce from this level. Now that's going to be a moment of truth for us concerning this structure, because that the bounce, the nature of the bounce, will tell us whether this is indeed an A, B, C complete, in which case that's you C. So you have an A, you have a B, you have a C, and silver will go back up. For several days, probably not exceeding the level right here at 28.47 to deliver the D. Okay, and then the E, and only then it will go up. Now, what happens if it drops? I'm correct, it's going to drop, and suppose it goes down to about 25.70, 75, okay, around here, and it doesn't come back, it doesn't rebound strongly. That will tell us that this structure is in control. Do you see that this is the right wave count? A, B, C, X, A, They'll be muddling through here, maybe another triangle, just crawling on the floor here, and then final drop, and that'll be an ABC. Now I've got to tell you that quite a few major producers of gold and silver, that I would look at them later in this video, are actually telling us, hinting, you will see the structures, it's very clear there, that in fact that could be the only move we are going to get before silver is really going to bounce back. So if I were to go Monday morning, let's say in the first 2-3 hours or even 4 hours of trading, and we see a drop in gold, silver, we see a drop in the mining stocks, they're probably terminated the structure that began from here, and they're due for a rebound. Okay, so that's what I would say currently concerning silver. This is spot gold priced in US dollars on the weekly scale, and as you can see, our working assumption is that we are in a fourth wave. There is a robust support line coming up here, and we are banking on it. We are building on this, that this is going to support the price should it come down to check the upsloping line here. And so far, everything that I see here is conforming to the pattern that is likely to generate eventually here a triangle. Yes, we're going to see a triangle, which is the usual pattern you would expect in a fourth wave. And you can see the decline is taken here as a C on the daily scale. We had an ABC, which is an A, ABC, which is a B, and what we are doing now, we are looking for the C to form. It hasn't finished. The pattern is not looking complete. I'm going to show you here the 60 minutes. And we just go through the brief history of what happened before we had this as an A, B, C. Yes, fairly simplistic structure which is behind us, definitely terminating the B leg, and then coming down I see this as potential structure as an A, B, C. That should be taken as an X. In that case, that's you A, that's you B, and we are due for one more drop. Okay, we are due for one more drop that could take gold to 1,896. Extension of the C could take it evidently lower to 1,868. In this zone, I would expect gold to get some serious support. You can see the upsloping line. Do you remember that big line that we saw in the on the weekly scale? So it is hovering around here, and on top of it you have also horizontal support. So I'm reasonably confident that gold will find some serious support around here, and it is likely to bounce back. Okay, it's likely to bounce back. There is one possibility for slight complication of the wave count here, is if this ends up being an X, and we just don't know at this point. I tend to think that this is really the X. Yes, that's A, B, C, X, that's an A, that's a B, and I'm looking really forward to one more drop. Okay, that is going to go almost certainly under 1,910. Dropping under 1,910, you should start looking for an entry to go long, but don't rush. Wait for the market to stabilize. Yes, wait for the market to stabilize. Give it a few hours to see what pattern is forming. Never try to catch a market that is absolutely in a major slide. Like they say, you do not catch a falling knife. Yes, you wait for the knife to hit the ground and then see that it stabilizes. Yes, the price action stabilizes here, and that tells you next attempt to rise above very short-term support that it will build. That is probably your entry point. Okay, do not try to buy it while it's falling. This is essentially imposing your opinion, trying to tell the market where the bottom should be. Yeah, this is something you should avoid doing. Don't get used to doing that. It's in the same way of trying to tell a market where it should stop when it's going up. You don't go and sell it here, sell it here, sell it here. Yeah, you wait for some sort of structure. You wait for some sort of signs of stabilization, of a stop, essentially stop and reverse. And then when it starts sliding through support, that's a more sensible selling point than here. I guess you would agree with me. So that is the situation currently in gold. I'll jump back to the daily just to give us an idea of how long we could be in this process. You see, this has gone on for about 2.5 weeks, and suppose we have another day or two going down to finish the C. We've got another 2 legs. We've got another 2 legs. I think we can easily sit around here for another 2 weeks, if not 3 weeks. And you don't know, it could become even more complex. Something that will be big news would be a break under this level. That'll be big news. Why? Because it's going to mark up our pattern completely. It's going to call for complete reassessment of the pattern that we have in mind. Yes. Another thing that could happen, and I haven't covered it, but you never know, it could happen. I'm back here to the 60 minutes, and I've been talking, when I covered silver and gold now, I've been talking about them actually looking down when they open for trading next week. But what about if they go up? Well, that's a totally different story, of course. I maintain at this point in time that the pattern as I have it here does not look complete, so that's why I do not expect that. But should gold not fall but rally immediately as it opens for trading above 1957 and it stabilizes above that level, I may have to come back and review the set of patterns that I thought operated here. Maybe I missed something. Okay, this will go counter to my thinking at this point, and it might indeed call for potentially further upside in gold straight ahead if we do get a base building around here. Some details about my service currently at 50% off for first-time users. You need to go on my website. The homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit you know, where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here. It takes you to the page where it explains to you. You should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you are not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you're interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year, but you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos, okay? So you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it, you'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you great trading week. Bye now.